Imagine waking up in the morning, opening your phone and seeing the headlines written in red. The stock market is crashing, trillions of dollars evaporating in a matter of hours. You ask yourself, what is going on? And most importantly, how does this affect me? Well, the answer lies in a decision that shook not only the United States, but the entire world. The tariffs imposed by Donald Trump began as a promise to strengthen the American economy. But now the side effects are reaching alarming levels. Canada, Mexico, and China did not sit idly by. Retaliation came hard and fast, setting off a chain reaction that put investors, companies, and consumers on high alert. As the Nasdaq faces its worst drop in years and the Dow Jones plummets, uncertainty hangs in the air. Are we on the verge of a new recession? The impact can already be felt in product prices, the cost of living, and the financial stability of millions of people. Stay with me, because in the next few minutes, we're going to look at what led to this chaotic scenario, and more importantly, what we can expect going forward. If you invest in the stock market, every Trump decision could affect your money. Subscribe to the channel and stay informed to protect your investments. It all started with an ambitious promise: to strengthen the American economy and bring prosperity back to the country. Trump believed that tariffs on imports would be the perfect solution to boost domestic production and reduce dependence on foreign products. But what seemed like a strategic move soon turned into an economic minefield. Canada, Mexico, and China did not accept it silently. Each new tariff imposed by the United States was met with retaliatory measures, creating an unprecedented escalation of trade tensions. The first signs of this clash began to appear in the financial market. Investors who initially saw Trump's policies as bolstering the economy now face an unstable and unpredictable scenario. The Dow Jones and Nasdaq suffered sharp drops, while large companies began to revise their projections. The fear of a recession has begun to hover over Wall Street, and the impact is already reflected in consumers' pockets. The rise in prices of imported products, the increase in production costs for several industries, and uncertainty about the American government's next steps have created an atmosphere of insecurity. Investors are trying to understand how far this trade war could go and what the real consequences will be for their portfolios. But the signs are not encouraging. With each new movement, the market responds with more volatility, and confidence in the recovery becomes increasingly fragile. And the worst thing is that this could just be the beginning. The impact on the market was immediate and devastating. In a matter of days, stock markets around the world began to feel the weight of uncertainty. In the United States, the Dow Jones plummeted almost 900 points in a single session, marking one of the biggest drops in recent years. The S&P 500 followed suit, falling 2.7%, while the Nasdaq posted an even sharper loss of 4%. And that was just the beginning. The American market has already accumulated a loss of more than $4 trillion in value, an alarming figure that reflects investors' fear and distrust. Technology companies, which historically remained resilient in the face of crises, did not escape collapse. Tesla shares plunged 15%, eliminating $125 billion in market value in a single day. What seemed unthinkable happened. Giants like Apple, Microsoft, Amazon, Nvidia, and Meta saw their shares fall between 2% and 5%. The technology sector, which in recent years had been the growth engine of the American economy, is now suffering a profound blow. And it wasn't just big tech that felt the blow. In the aviation sector, Delta Airlines cut its profit forecasts, sending its shares down by 14%. The automobile market is also in trouble. Uncertainty over tariffs has increased production costs and reduced investor confidence. Automakers that depend on imported parts have seen their costs soar, making production more expensive and less competitive. The impact is global. Suppliers around the world are facing difficulties in maintaining their operations, further worsening the crisis. The domino effect spreads quickly. The U.S. government bond market also began to feel the effects of instability. Yields on U.S. 10-year Treasury bonds fell to 4,021%, a sign that investors are seeking refuge in safer assets. At the same time, the dollar index fell to its lowest level since November last year, signaling that confidence in the U.S. economy is weakening. The effects of Trump's tariffs go beyond companies and investors. the average consumer is also beginning to feel the effects of this turbulent scenario. Imported products are more expensive, inflation is starting to become a real concern, and the population's purchasing power suffers a direct impact. If the situation continues to deteriorate, the job market could be the next to feel the effects of this crisis, with mass layoffs and investment cuts. Given this scenario, what should investors expect in the coming days? Will the government be able to reverse the situation before the market sinks even further? And most importantly, what does this mean for those who have money invested? Experts, market analysts, and even politicians have expressed divergent opinions about this tariff escalation, and the heated debates reflect the complexity of the scenario. On the one hand, some economists claim that Trump's measures, despite being controversial, may be a necessary evil to rebalance international trade and encourage domestic production. One renowned financial analyst even declared that these tariffs, although painful in the short term, could force an economic restructuring that will benefit the country in the long term. On the other hand, critical voices warn of the risks of a devastating domino effect, reinforcing that retaliation from trading partners, such as Canada, Mexico, and China, has already begun to create unsustainable uncertainty in the market. An influential economist, known for his precise analyses, considered that the risk of a recession is real, as protectionist measures could undermine investor confidence and harm the competitiveness of American companies. At the same time, politicians are also divided. While some defend the strategy as a bold step to reverse decades of external dependence, others accuse the administration of adopting an aggressive stance that could isolate the United States on the global stage. In recent interviews, several representatives stated that the country needs a more balanced policy, capable of protecting national interests without compromising market stability. This diversity of opinions creates a climate of expectation and unrest, where each new official statement seems to intensify the controversy. At the same time, the analysis of official perspectives reinforces the idea that the consequences of this trade war may be even more unpredictable than initially expected. With uncertainty hovering over the next steps, investors and consumers closely monitor each position, each alert, and each forecast released, in the hope of better understanding the paths that will unfold in this turbulent scenario. Do you think Trump's tariffs are sinking the United States or strengthening the economy? Leave your opinion in the comments. The impacts of Trump's tariffs were not just limited to market indexes and investment volatility. Entire sectors of the American economy began to feel the weight of these policies, and some of the largest companies in the world saw billions of dollars evaporate in a matter of days. The technology sector, traditionally one of the most resilient in times of crisis, was one of the hardest hit. Tesla, which was already facing challenges with its global supply chain, saw its shares plummet 15% in a single day, eliminating more than $125 billion in market value. Giants such as Apple, Microsoft, Amazon, and Nvidia also suffered significant losses, with falls between 2% and 5%, directly impacting investors and pension funds that depend on these assets. In the aviation sector, the scenario was no different. Delta Airlines, which recently announced optimistic forecasts for the year, had to revise its projections, and its shares plummeted 14% after the company acknowledged that operating costs had increased significantly due to tariffs on imported parts and fuel. American automakers were also hit hard. With the imposition of tariffs on auto parts imported from Mexico and China, production costs have increased dramatically, and companies like Ford and General Motors are already facing reduced profit margins. Many of these automakers rely heavily on components made abroad, and rising costs are being passed on to consumers, making cars more expensive and reducing demand. In the retail sector, supermarket chains and appliance stores are also facing difficulties. The increase in tariffs on imported products caused basic items such as electronics, clothing, and even food to suffer price adjustments. Large chains such as Walmart and Target have warned that operating costs have risen considerably, and the tendency is for consumers to feel this impact on final prices. With the effects spreading throughout the economy, the big question now is, how will these companies react to minimize the damage and maintain market confidence? The international response to Trump's tariffs was not long in coming. As soon as the United States imposed new duties on foreign products, countries such as Canada, Mexico, and China reacted with equally aggressive measures, intensifying the trade war. Canada, one of the US's largest trading partners, did not hesitate to counterattack. The Canadian government announced a round of tariffs on $21 billion in American products, directly reaching strategic sectors such as agriculture, household appliances, and beverages. Furthermore, it promised to further increase tariffs if Trump's protectionist policies continue to impact its exports. Mexico did not stand still either. The country, which has maintained intense trade relations with the United States for decades, threatened to retaliate with tariffs on consumer goods, directly affecting large American industries. Some technology companies and automakers, which depend on Mexican production to reduce costs, have begun to review their strategies and are even considering transferring part of their operations to other markets. The most delicate situation, however, is with China. The Chinese government has imposed tariffs on a wide range of American products, including soybeans, beef, and liquefied natural gas, sectors critical to the U.S. economy. The American agricultural industry alone already accumulates billions of dollars in losses, and many producers are pressing Washington to find a solution before the damage becomes irreversible. The effects of this trade war are being felt around the world. Multinational companies operating on different continents have begun to reallocate their investments, while global trade enters a state of caution and retrenchment. The U.S. dollar, which previously strengthened given the prospect of a more protected economy, now faces constant fluctuations. Meanwhile, leaders from several countries are trying to renegotiate trade agreements to minimize losses, but the impasse with the United States is making any significant progress difficult. The White House, in turn, maintains the position that these tariffs are essential to guarantee the country's economic sovereignty. But will this power play bring real benefits, or will it just further deepen global uncertainties? Looking ahead, forecasts for the American economy are increasingly divided. On the one hand, some analysts believe that Trump's strategy could, over time, strengthen the national industry and reduce dependence on imports. The theory behind this view is that by making foreign products more expensive, demand for goods made in the United States would increase, boosting local production and creating jobs. However, this recovery would not be immediate and could be accompanied by a period of strong instability, which is already being felt in the financial market. On the other hand, there are growing fears that this prolonged trade war could push the United States into a recession. Some economists point out that the combination of higher tariffs, falling exports, and loss of investor confidence could result in slower economic growth in the coming quarters. The market itself is already reacting to this possibility. Many investors have begun shifting their resources to safer assets, such as gold and government bonds, while hedge funds are reducing their bets on shares of companies directly impacted by the tariffs. Companies are also adjusting their strategies. Some have started to look for alternative suppliers outside countries hit by the tariffs, while others are passing on the costs to consumers, which could result in inflationary pressure in the coming months. If prices continue to rise and wages do not keep pace, the population's purchasing power will be reduced, further worsening the economic scenario. Furthermore, if trade tensions are not eased, unemployment could begin to rise as companies downsize their operations to contain losses. The next few weeks will be decisive in understanding the direction of the economy. If the U.S. government can renegotiate more favorable trade agreements and restore investor confidence, there is a chance for stabilization. Otherwise, the impact of tariffs could turn into an even bigger problem, dragging not only the United States but also other global markets into a deeper crisis. The big question now is, how can this situation evolve, and what will Trump's next moves be in this economic chess game? The situation is far from resolved, and the consequences of this trade war could completely redefine the American and global economy. We saw how Trump's tariffs, which began as a strategy to strengthen national industry, triggered a series of adverse reactions, from the brutal drop in markets to retaliation from countries like Canada, Mexico, and China. Giant companies including Tesla, Apple, and Microsoft have lost billions of dollars in market value, while entire industries such as aviation and automobiles face daunting uncertainty. Furthermore, investor confidence is increasingly shaken, and many are already seeking refuge in safer assets, fearing that this trade crisis could push the United States into an imminent recession. Now, the big question remains, Where do we go from here? Will Trump double down and tighten tariffs even further, deepening chaos in the market? Or will there be a turnaround, with trade agreements emerging to soften the impacts? The only certainty is that each new government decision can directly affect your investments, your spending, and even your financial security in the coming months. And I want to know your opinion. Do you think Trump is sinking the United States with these tariffs, or is this a strategic move to strengthen the country in the long term? Leave your comment below. Let's debate. And if you want to continue closely monitoring all these movements and understand how they directly impact your pocket, subscribe to the channel right now and turn on notifications so you don't miss any updates. And there's more. Next door, there's an essential video for you to understand what is Trump's next move that could directly affect his finances. If you invest, consume, or simply want to protect your money, you need to see this. Click now and find out what could be about to happen.